$3,000 gold. Things really escalated quickly. Does this mean that it's time to sell? So we're in the midst of a run on gold price like we haven't seen for 13 years. And I want to zero in on that for a minute. And maybe you've heard the news. Gold just hit $3,000 an ounce. This is a milestone that probably most of us saw coming, but now the question is, what happens next? Do we keep at it just like any other day? Do we buy more, or do we sell? Now that's a question that's probably always out there to a certain extent, but big price milestones seem to bring those kinds of questions into focus. Some people maybe have a number in mind. Maybe it was $3,000 and maybe it snuck up. So the first thing we need to look at is why gold is moving. If this was one thing causing a price spike, I'd say it's probably your time to grab that profit, if that's your goal, but it's not one thing. It's more like in REM's song, it's runaway inflation, tariff threats, recession fears, Fed policy and interest rates, global instability, de-dollarization, international trade efforts, and BRICS, it's central bank buying, and investor inflows. So there are lots of significant reasons the price of gold is going up. Now I want to get into what comes next, but before I get us on a roll, let's give a quick shout out to Summit Metals. They're a channel sponsor here. If you're in the market for gold or silver, I've already told you about them. They're great. I want you to check them out, though, on your own. See for yourself. They're exceptionally fair, and it's easy to see. SummitMetals.com. Now, I just sped over all the things pushing the price of gold up. Those are the reasons that I'm not considering selling. There are other reasons, too. But the reason that I think the question of whether we should comes from the speed of the rally. 15% gain on gold price so far this year, 28% last year. And we haven't seen an annual gain of 28% since 2011. That rate of growth for gold just isn't normal, and if you were around for the run-up in 2011, you were around for the fall in 2013, and maybe you still have a little bit of post-traumatic stress. So if it's feeling like deja vu, or maybe you just have a feeling of what goes up must come down, well, it's probably a big decision, and we need to consider a few things. Now, first of all, I think an unsustained rally has a way of forcing retail buyers out. One of the symptoms of a gold rally is premiums spiking from retail demand. We saw that in 2020, but premiums on physical metals have actually come down. The bigger issue with price is that a lot of us felt $2,000 was too expensive when that rolled up. Well, now we're looking at $3,000. That snuck up on us while we were still getting comfortable with that first jump. And if we look at the past, well, it's hard to ignore what happened in 2011 with that eventual price crash in 2013. But if we were to look at what's happening today, most analysts just don't see $3,000 as a top. Now, I don't know the Macquarie Group, but they're Australian, and that's a positive. They make great coins, and news of their $3,500 Q3 price prediction is making the rounds. Now, I don't know that the Macquarie Group is saying that $3,500 is going to stick, but I don't even see conservative calls out there for a significant pullback in gold price this year. So any comparison to 2011 is probably just emotional. Now, this question of whether it might make sense to sell is a question for people with physical metal. We're talking about this stuff, not trading. If you're trading futures contracts, you probably already had an order to go at $3,000. I think it's safe to say there are traders ready to take profit at that level. But if you're buying physical gold, nothing has really changed in holding it. It's more a question of whether you continue to buy it and how you buy it differently. We need to focus more on minimizing premiums and averaging costs, and probably avoiding big jumps in rolling everything you have into gold at a landmark all-time high. Realistically, though, it doesn't matter if you have physical gold or not. Somebody out there was probably waiting for $3,000 to make a move. They had that number in their head and they thought, when it hits $3,000, I'm going to sell it all. I'm going to pay off a mortgage. I'm going to move to Florida. But like I mentioned earlier, $3,000 might have rolled up a lot faster than a lot of people would have guessed. So now you have to look at the wider environment, what else is going on. And the problem there is that everything else is wildly in flux at the moment. So maybe it's not a great time to make big life changes. And that sounds a lot like life coach advice, I guess. I'm certainly not that. I just wonder what else you roll the profit into right now. I don't know. Maybe you have the perfect house and golf cart all spec'd out, but if not, we're kind of stuck in a weird time. So like I said, I'm not selling. I gave two reasons. I just implied that I don't really have anything better to roll it into. And the other is that I don't see the rally stopping. I don't see $3,000 as the top. Now, what I haven't mentioned is that this isn't trading to me. If I haven't been clear on it, I'm long on gold as a way to save. And I have to comment on that part because I've seen comments from people who feel the premiums make gold ownership a bad idea. Now, I've got two types of coins on the table here. One's collector coin, the others are standard bullion. My average premium on each of these buffaloes is probably $80 or $90, but my average gain is still probably $1,200. Now, for the collector coins, the ones that felt a little too expensive when I bought them, I think I paid $2,300 for the rabbit. That would have been the 2023 version of this high relief proof lunar coin, $2,900 for the dragon in 2024. Those felt really expensive. Now, take away their collector value entirely, just look at the gold content alone, that is worth $3,000. So that's risk aside. That's just the safe part of it, just the gold content. Now, there are cheaper hobbies if that's how you see gold, but I can't think of alternatives that give a better return for low risk savings. So congrats on another price milestone if you're already holding gold. If you have no plans to sell your gold, well, the price rally, it's just an event that's costing you a little bit more as you accumulate or making you feel a bit better as you hold. But nothing's changing logistically if you do want to sell. Every local shop that I've talked to recently is happily buying. Nothing's changing logistically if you're just holding. And the only thing changing if you're buying is the spot price. And yeah, that part's a little unfortunate. So let's call it good there. Let us know if you've been waiting for that $3,000 mark to sell, or it snuck up on you and now you're kicking it around, or if you're just here for the show, ready to see how much further it can go. Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.